Hello and welcome to Macro Mondays on a Wednesday yet again here on Landy's Crypto Corner, where we took a look at the longer term timeframes and weave that into our daily analysis. Now, I waited on this one because we did have a monthly close coming up midweek this week, and we just got that. So let's go take a look at it here and see where Bitcoin closed at. All right, so let's turn off this local zone area. I'll get back to that later. Let's go ahead and turn on the monthly support and resistance areas and take a look at this close. Now, for me, a high hasn't necessarily been put in. You will see some analysts will call this high already in. I kind of go with where RSI would put the high, and that would be a close, in this case, below last month's wick low. And in this case, we didn't see that. So we did see a close come in at 27,233, and the wick low was 26,965. So that area was tested in yesterday's price action as well. So, we may see this happen in this month's candle. I know that June is pretty historically dumpy for Bitcoin, but, right now Bitcoin's just trapped in between support and resistance. So when looking at this, we see that we came up and tagged this area at this low from June of 2021. And there's kind of a zone in here. We have the June of 21 low. We've got the open from June of 2022 up there at 31,800 or so. And then just overhead, there's some more resistance at around the January of 2022 low. And then there's the close open structure here from June to July of 2021. So big resistance overhead. Not surprising that things have pulled back from here. To the downside from the monthly look, it's the same that I've been talking about for a little while now, and that is the wick highs here from this high back in August of 2022 at around that 200 to 300 area to the close open structure from July to August. So that is coming in at around 23.3. So that's not much has changed rather. When looking at momentum is still pointed up. Of course, Stoke is a lagging indicator. This is a regular Stoke, not a Stoke RSI. But in this case, it's still pointed up and looking to crawl its way out of the oversold zone in this case. So I'm sorry, it's already out of the oversold zone. It's looking to crawl its way out of the bearish control zone. We can get the pivot for this in terms of price action. What would turn this down or keep it pointed up? This indicator is not a free indicator. It is a paid indicator from app.crowntrading.net. It's by KVDB. I have no affiliation with them. I don't make any money by recommending it, but I do find this indicator useful because it can give you the momentum pivot basically. So in this case, this has updated to 17,760 or so, 17,800 if you just want to even that out. So it's still looking good on the momentum front for the monthly. Now, the lower timeframes in a monthly, though, that is going to be a different story. So let's go ahead and go down to the 4-week. Now, this has still got some ways to go before the close here, 17 days and 23 hours. So, this is now looking on for its next closure to get outside of the bearish control zone. Still healthy, still pointed up, looks good. And in this case, the momentum pivot has updated to 18,320 or so. And that is, that's a pretty key area down there in and around this, the low side structure. There's an order block in there. And that is actually going to be, so the low side of this is 18,131. High was 19,500 with an open at the high was at 21,500. The open was at 19,500. And the close was at around $21,000. So, a big area. It has been tested back in February. So this is going to be key as we go down the timeframes here, because we are seeing that the Bollinger Bands are what's kind of holding things down here. So trading underneath the basis band of the Bollinger Bands, is indicating that there is not an insignificant likelihood that this could pull back to some of these key levels on the 4-week chart. That would be the close open structure here, which is going to be a little bit different. It's at 24,300, which actually is a weekly level. So that is a weekly open and close. It's also a 4-week and a daily level. So that's a big area below some of the supports that I'm going to show you on the daily here. So keep that area in mind. And we can see, everything else looks pretty good here. I'm not seeing anything concerning just yet. And on the 3-week, this is something that is pretty consistent with Bollinger Bands. So when looking at the 3-week, you can see that this off of tight compression, it was closing outside of the third standard deviation on that really impulsive or parabolic move. Came back down to the basis band for support, and then popped back up just shy of the upper second standard deviation. Once it lost the basis band, it tried to hold support at the lower first. This is important. Then it lost it, got expansion to the downside. So we saw expansion. We see this compression here. Comes back and loses the lower first because we saw the compression. Now it's going to expand down, starts below the lower first and upper first. So we get that expansion down. We start aggressively expanding the Bollinger Bands down here on that closure below the lower second. Comes back, works its way back and finds the lower first as resistance. Now that area gets broken. It comes up to the basis band, finds that as resistance, and then comes up and finds resistance at the upper first. Now, the last line of defense to stop an uptrend from happening would be a rejection at the upper first, a closure back below the basis band, and then subsequently a closure back below the lower first to continue trend to the downside. Now, that's not what I'm really looking for. This is a transitionary period. We see that we had expansion of the Bollinger Bands down, and now we are seeing compression again. So that is going to be where we are looking at a transitionary period that likely, worst case scenario, you want to see things come back down. And if they do break down, if it does break down rather below the basis band, you want to see it hold the lower first. And that is where you start to see things chop around. That's usually a pretty long form consolidation before a really is on a 3-week. That's, long form consolidation to a massive run up. Now there was pretty good consolidation, but we didn't have any kind of a shift from expansion to compression. And now we have that shift from expansion down to compression. You want to see this either get above the upper second and begin expansion to the upside. And that's at around $31,500. And usually it knocks its head on the upper third. Not always, but that is typically what happens. You'll see that, back here, it did not do that. It just compressed sideways and then just ran because it was a pretty tight compression for the 3-week. We are getting close to something resembling that. I don't think it's ready just yet. It could be. But I do think that, worst case scenario, things come back down to the basis band at around $22,500 to that lower first, which everyone's going to start screaming and yelling black swan if that happens, by the way. It happened back here, and a little bit of a history lesson for you real quick. Everyone that calls the 2020 dump off a black swan event, I vehemently disagree with, because it was very clear that this was a longer term, more macro lower high in relation to the all-time high. But we had this higher low. Yeah, well, we had the higher low to another lower high. This 3-candle structure is a high in February of 2020. I remember at the time I was talking to many people in my trading group about this and said, we need to be looking back down to this low side structure. Now, I couldn't have told you that it was going to dive as deep as it did, but we were watching it very closely and we were very prepared for what was happening. And it found support, go figure, right around the high side of the lows from 2018. So what does this look like? Well, this kind of looks like what Bitcoin is doing now. The biggest difference is we didn't see as much of a compression on the Bollinger Bands here. So if you were to compare where compression is right now with the lower first and lower second, well, we can just go do that. I mean, we see that they are trending up. So this is more akin to what we were seeing back here on this lower high, where we see this instead of the bigger run up, we're seeing we're seeing the look on the Bollinger Bands a little bit more akin to what we saw in January and February of 2020 in terms of where it is in its compression. So that to me would tell me that anywhere below the basis band, that lower first standard deviation is fair game. So if we do see a 3-week start closing below here, that would be below that 22,600, 22,500, 600 area. That is going to be, indicative of, at minimum, more than likely a run around this order block area where we have this red candle here, this bear candle, And that's, its low is at 21.5. Its high is at 24.3, which again, that's that 4-week level. It's also a weekly closing level as well that has not been tested. So we could see something like that where it comes down, hits that area, and then pulls back up and closes above the basis band. But closures below do open up targets down to that lower first at 18,200 area, which again, that's the high side of the lows. And you would hear everyone screaming black swan event. And, is there precedent for that in terms of what's going on in the wider economy? Yes, but it's not a black swan if you can predict it. So let's go ahead and take a look, and we can see that, it's in a pretty critical region for Stoke on the 3-week, but it is not yet a concerning signal just yet. So the 3-week looks fine to me as well. The 2-week, we are above the upper first standard deviation of the Bollinger Bands here. We have seen the compression. So we saw expansion, and now we have seen the compression to re-expansion. So this is a good sign for the bulls. And what I'm going to show you is there's two conflicting signals here. For the bulls, holding this upper first is really going to get more expansion to the upside in this case. But we are still in a mean reversion play. And you're probably thinking like, wait, the way that you've explained Bollinger Bands is below the lower first and above the upper first. It's usually you're in an expansive phase. Well, because the expansion phase was so aggressive to the downside, that this is a mean reversion play. And to get expansion on the 2-week here, again, we need to see it back above the upper second. Why? Because it came down, it expanded down, it mean reverted or compressed, and then we got re-expansion up. And now it is in a mean reversion play. Well, mean reversion plays for Bollinger Bands like this typically come back and find support around the upper first basis to the lower first. So let me just make sure that I explain this correctly so that you can fully understand. Bitcoin expanded to the downside. It then compressed volatility here around the basis band, and then it got expansion up. And now it is cooling down again. And it's still above the upper first, but that's because it mean reverted, expansion, mean reversion. So what we need to see here to maintain an expansive posture, it's going to naturally expand as long as it's above the basis band in terms of it will keep that number fairly steady. But in this case, above the upper first, we need to see this thing then push up to the upper second. You'll see the BBWP number will begin to go up again. Closures above there, and especially multiple closures, will get more aggressive expansion to the upside. And this is coming in at 30,500. Now, this is closing with this week's candle. So we are going to see, the upper first standard deviation move up and the basis band and the lower first. So this is going to change a little bit on this coming closure this weekend. And that's going to be, where we see the lower second start to probably tick up a little bit more, the lower first start to get a more aggressive upside expansion. Now, I did want to point this out, though, ahead of time, because you can see that the basis band is at 22,300, we'll call it, right? It is right around this high side structure here on the 2-week, this close open structure. Just below there is another close open structure. We have the closing structure just before, the breakout above the basis band here from January. So big key area, and just above there is the monthly support at 23.3 as well. So that's going to be a key area for Bitcoin to hold, or else it's going to be down to the lower first standard deviation, which is coming into, again, the high side of the low structure of that major low down there. And in this case, this is at 18,160 or so, again, around the 18,000, 18,200 area. So I did want to kind of emphasize this one a little bit more. Let's go to the weekly now. The weekly has come back and tested the basis band, and it's still got a nice upside angle here for expansion to continue to the upside, or in this case, to re-expand to the upside, because you see that we had all these expansions down, mean reversions back to the basis band. Well, then we shifted and expanded to the upside, mean revert back to the basis band, expand to the upside, mean revert back to the basis band. And you can see that we have very, very low volatility now as the basis bands kind of catch up because of this long form consolidation just going sideways here around the high side structure. We see that the basis bands are starting to compress again. So this is implying that there is a bigger move coming soon. Now, above the basis band at around $26,000, good. More likely to go up and start getting closures above and trading above the upper first standard deviation, which right now is coming in at 28,700. You start seeing that, we're going to see this BBWP number go up yet again. And then closures above the upper second, you'll see this aggressively start expanding to the upside. And that is going to be at 31,371. So about 31.4. Above there, you would see expansion to the upside. And typically we do see Bitcoin knock up against the third standard deviations, even on these tight compressions. Sometimes you'll get wicks outside, but they usually turn into just that, wicks, when you're looking at the weekly. The upper third standard deviation is coming in just below a monthly resistance at $35,000. So real quick here, we're going to go and turn on the monthly support and resistance zones, and you'll see that this $35,000 just, excuse me, I'm losing my voice already, monthly wick low, which is this guy over here at around 33, to this $35,000 close on the monthly. So that is kind of bracketing the upper third standard deviation. And of course, we have the upper second right there, just below that monthly wick low at around $33,000. So just a little bit of context there. We do see that we are trapped in between support and resistance, and the basis band is also right there. Now, something to lend confluence on the weekly for a downside move. Where do you want to see it come in? Well, you want to see it come in right at support. So if we did see a downside move, we have, the basis band is supported around this 27,128 currently. And I'm sorry, that's not the basis band, is it? Yes, it is. No, it's $26,000. Sorry, I was reading the price. $26,000 at the basis band, down to this support area at 25,200 to 300. And then what's right below there, the lower first is coming in at the monthly support and resistance level at 23,300. That is something that if you did see it happen and get a nice buyback off that area, that's where we like to see at worst the uptrend get continuation from. So put in a low around the lower first. And in fact, this could probably even get down to the lower second, even at around 20,000 to 20,500, which is another monthly support area at 20,500. Swing this low side structure, we would still have the proper structure for an upside impulse. So I wouldn't necessarily want to see closures below the lower first, though. That's not preferred. Anywhere below there, I think that we will see a more long form accumulation period. So let's go ahead and get rid of the monthly support and resistance zones. This would, in my opinion, closures. Remember, closures. So Bitcoin can come all the way down and tag the lower second or even the lower third or even the lows over here. It could go to zero. And as long as it gets closures back above the lower first, I think that Bitcoin can avoid an extremely long-term sideways period. But if we do start seeing that, I do think that this more than likely goes on for a little bit longer. And we reset momentum and stuff like that fully before another impulse up. Now, in this case, we can see that the weekly Stochastic is pointed down, and the pivot on that is going to be 28,700. So it's actually above my ever so important 28,600 daily breakout level. So let's go ahead and look at a few other things here, and then I will let you guys go here. Let's look at the 5-day. So 5-day is still right around the basis band. We do see that Stochastic is diving fairly quickly here. Towards its next closure is going to come in and around the bearish control zone, and $30,000 or so, $29,800, almost $30,000 to turn that back up currently, but it is diving pretty quick. So we might see that tick down to a more achievable price level from where Bitcoin is trading right now. I do want to note some of the major areas here. The lower first is coming in at 24,800 or so, 24,741. So basically 24,800. And this is going to be important when we look at the daily. That's that daily support and resistance level is 24,800 to 25,300 basically is what I have marked. That's what you hear me talk about as the previous daily breakout area in the Bitcoin in 60 seconds videos. We see that the the 3-day came down to the second standard deviation in the, it's now in the mid $25,000 region, but, we tagged around that 25,800 region at this low. We see that it did close the last 3-day above the lower first, initial rejection off the basis band. So nothing too crazy there. We see that, things are just kind of sideways on the 3-day right now, but back above about 28,100. And that would give the 3-day the opportunity to come up and test around the upper first standard deviation at around low $29,000 area, 29,350 or so. And the upper second standard deviation upside expansion would begin aggressively, and that's coming in at 30,500, which is the close open structure over here. So beating out the local highs on a close on the 3-day would expand things to the upside. And same goes for the downside. Lower second standard deviation gets dropped. That's around 25,600 on a 3-day close. That would start to get expansion to the downside. Wouldn't be a dead sentence right away. More than likely, though, we would see expansion down to some of those key areas that we talked about prior on some of the higher term timeframes. And we do see that Stoch is pointed up, though. The momentum pivot for that is going to be 26,722 bucks. So above 26,750, give or take. Depending on your exchange, is going to be just fine coming into the 3-day closes as long as Bitcoin is above there. The 2-day, we see that Bitcoin came down to the lower second standard deviation here, and that is currently at 25,800. So it's actually 25,880, so almost 25,900. Anywhere below there, we're looking at expansion to the downside. Okay, we lose these lows, this is going to expand to the downside. So daily closures below there, more than likely going to lead into 2-day closures below there. We see more aggressive expansion to the downside then. Now, Bitcoin did already test this area and pop back up, nearly got to the upper first standard deviation, kind of hung around the basis band, and then has now dumped off from there to the lower first. So your warning signal is going to be below 26,785 here at the lower first. Then you need to keep an eye on the low side structure, because if that does start to, if it starts getting closures below there on the daily, that's likely going to lead into the 2-day, which then will get expansion of the Bollinger Bands to the downside, thus targeting some of those lower targets that we talked about. Back above the upper first, though, at this is going to be 28,600. This is my daily breakout level. Sorry, I just hit my microphone stand. Then, we can target up to the upper second standard deviation, which is coming in around these wick highs. Sounds like very eerily familiar. Jeez, a tough time. But that's your $29,500 to $30,000 level. Closures above there, we see expansion to the upside, likely taking out these highs at $30,500 to $31,000. So that is going to be something worth watching, as we do see that Stoch is pivoted to the upside right now. Now, the key area to hold, though, is 26,762. Go figure. That area right here below the lower first standard deviation, if that is lost, you will see Stoch turn to the downside. And you will see slight expansion of the Bollinger Bands, but that won't really get rolling until you see closures below the lower second. And I would be careful because this thing could just bounce off of there as well. So it'll, if that does start happening, we'll talk about it when it does, but don't want to get faked out, basically. There are scenarios where things can obviously trade down there, go sideways, and then pop back up, even get spikes in by the lower third standard deviation. So right now, this is kind of a range play between the lower thirds at around high 24,900 rather, to around that 30,400, which is above the actual highs up there. So kind of a range play at the moment. Now we get to the daily, and here's where things get good. Knowing all of the information that we just looked at, we can now look at the local zones first. Now, I've been talking about this for a while. I've been posting about it in various social media formats, mainly Twitter. And in this case, we have really clearly defined zones. We've got 26,300 to the downside. Below there, likely run the lows down to 25,800. And go figure, we see that the lower second is just below that 26,300, coming in at around 26,232. And we see the lower third standard deviation of the Bollinger Bands is coming in at 25,800 or so at the actual wick lows. We start closing below there, losing this low side structure, we will see expansion to the downside. Now, we did see some expansion or volatility uptick to the upside as Bitcoin went from, this volatile move down to a more compressive move, while preserving some of that expansion off of this low side structure back up, and closed above the upper second a couple days ago, that being the 28th. And now has pulled back to the basis band. So things are neutral right now for the daily. Back above this line here, which is the consolidation wick high, 27.7. And in fact, it's 27.678. Back above there would also be above the upper first standard deviation. You'll see BBWP begin to go down initially as the move was down. So it would be a mean reversion back up slightly. Right? But the longer it hangs out there, this number will just kind of go sideways in many cases. And then back above the upper second standard deviation, which will be above the close opens, which is at this low over here at $28,000. Back above there would be above the upper second standard deviation at 27,893, so 27,900. And we would see upside expansion again. And then that's where we can start targeting this area over here at $29,500 to $30,000. And then, of course, the highs at $30,500 to $31,000 up here. Now, I do think any kind of aggressive spikes down, usually you're going to see just like the aggressive spike to the upside, it passed the upper third standard deviation, and it was kind of a corrective move back up after this expansion to the downside. So it got sold into. I do think that if Bitcoin immediately dumps out to the lows, it might tag lower than the lower third, but I do think you're going to see it get bought back up initially before the real move gets started. Just like don't get faked out. Well, a lot of people got faked out on this one. It spiked above the upper third, sold off, and now it's right back to neutral at the basis band at around $27,000. So if Bitcoin does lose the lower first at 26,650, that's your warning that it's probably going to go test this low side area around the lower second and third in the low $26,000, high $25,000 area. If it starts aggressively closing outside of that, lower term time frame bounces are probably going to occur before the real decisive move for expansion gets rolling, because this is a neutral setup. They're about even. And, in this case, the basis band is even slightly pointed up. So we do see that the daily, though, on Stoke is starting to turn. Now, to preserve, I don't take the initial cross. Typically, when I'm looking for validation, excuse me, I'm popping my knuckles here. My bad. I'm looking for, this would be a rejection around the bullish control zone of momentum for Stoke. Initial cross down, I'm not too enamored with. You do see a lot of crosses into, and then you end up getting continuation. I want to see both the K and the D read flipped over. So that usually takes two closures, and we'd get advanced knowledge of which way things are headed based on closing below the basis, lower first, lower second, so on and so forth, or above the upper first, second, third, right? So we'll have advanced knowledge of that probably below the basis band here. But closures below, in this case, 27,233, we'll get an initial cross down. That would be our, this is our Thursday candle, right? Then it would be the Friday candle that would have to confirm. So Bitcoin kind of gets a chance, in my opinion, when it comes to reading Stoke specifically, it would kind of have a chance to recover itself. But that's going to pretty much do it for today. I do have a Bitcoin in 60 seconds short video out. And if you guys can, if you do like this content, go ahead and like, subscribe, turn on the bell for notifications. That stuff really does help. And commenting. If you have questions, go ahead and comment. Or, if you want to tell me something, or if you have feedback, go ahead and comment. That really does help. I've been growing pretty steadily, but the algorithm's kind of unsure what to do with some of the content now, as crypto's kind of quiet at the moment. So that stuff really does help. Like, subscribe, bell, comments, and then if you do share it, that actually that's a big boost as well. So I do want to thank you. Have a good morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. With all of that being said, Landy out.